Good afternoon, everybody. I guess I got the lunch slot, so I appreciate you being here. This conference has various newsletter writers speaking and stock pickers and that kind of thing, and that's not what I do. So I thought, okay, what can I do that could potentially be of interest to investors and people to help them with their task of sifting through the multitude of juniors out there to hopefully make investment decisions. I sort of principally, for Mining Journal, I principally focus on Latin America, so emerging markets, and there are risks in emerging markets. So I thought, okay, well, I'll look at that. I'll look at, from my perspective as a journalist and researcher, what are the kinds of risks I sort of look for, and how, by sharing that knowledge with you, how can that help you perhaps read the corporate presentations of the companies, what sort of messages should they have, good things to look for, and conversely, what are the things that they don't have that can potentially indicate red flags. So a little bit about myself. I've been a mining journalist and researcher for about 20 years now. For the last, let's say, 15 years, I've been living in Latin America, 10 years, 11 years in Chile, prior to that 5 years 10 years in Colombia, prior to that 5 years in Chile. What do? Basically looking at the mining companies, the exploration companies, the jurisdictions, generating information about what they're doing, what they're not doing, what are the factors that help a jurisdiction become attractive and conversely become unattractive. At Mining Journal, what we particularly look for are growth and development stories, identifying project success factors, identifying factors that could mean a project won't go forward, looking at the management teams, can they deliver, what's their experience in delivering projects in the past, and particularly the soft information, which can be very critical. The communications, the press releases have a lot of technical information, but they very rarely contain the soft information such as community relations or government relations or licensing aspects that make or break a project, can make or break a project. And our sources for that typically are the public information. We do a lot of research on the ground, so generating our first-hand research, meetings with government, meetings with the companies, sometimes meetings with people on the ground in countries, attending conferences such as this, and obviously site visits as and when we can. Which is number 5, yeah. So here I've put up a general slide about looking at the different countries in South America and looking at sort of a general overview of country risk. And here we see that by and large, Latin America is enjoying one of its most stable periods in living memory. The crimson flush of left-leaning governments elected, a decade, 10, 15 years ago, have mostly gone and been replaced with centrist, right-leaning governments that, by and large, are pro-business, obviously with one or two exceptions. However, the issues for the mining sector tend not to be with national governments, but with local and regional governments. And generally speaking, those are the key relationships that any company has to develop. Most governments want investment, they want foreign direct investment, they want them dollars, but it's really at the local level that make or break a project. And this is key. So it's key to identify areas or localities that are where they accept mining and those that really don't accept mining. As an example, just using Peru as an example, Peru's a mining country, right? It's got a lot of gold production, it's got a lot of copper production, but there are regions in Peru where it's possible to develop projects. Conversely, there's regions that it's very difficult to develop projects now, and it's movable, it changes. Going back, 20 odd years, Cajamarca was at the vanguard of the gold sector in Peru with the development of Yanacocha. Times have changed, and now the people of Cajamarca are very resistant to developing or allowing the development of new projects. It's a similar situation in provinces in Argentina, Colombia, and elsewhere. So, as investors, what should you look for? Successful juniors have projects with good geology. I guess that's a given, but I'd also argue that's the basic starting point. They have the appropriate skills in-house to explore, develop, or operate the project, and to access the funding they require to do so. But what makes a workable jurisdiction in terms of the government and the social aspects of being an investable project? Whilst there are some obvious red flag areas, the difference between a workable area and an unworkable area may often come down to management and its approach in creating, cultivating, and sustaining local relationships with local stakeholders, with local government. So when you're looking at the project information in a corporate presentation, there are several things that I would say you want to see evidence of. And you want to see compelling evidence of successful community and government engagement. But it's also valid to bear in mind that assume nothing is simple or smooth with communities or government, particularly in Latin America, and things can change rapidly. What are the timelines for permitting and processes? We're obviously here in Canada. The Anglo-Saxon mindset of the law says this, the government must do this, very sequential and time-constrained, does not really apply in a lot of emerging markets, particularly in South America. The law may say one thing, but timescales may not always be amenable to that sort of strict discipline. The culture of mañana is a very real phenomenon, a very real factor. How is a company addressing potential issues, social issues and conflicts? How complete is the picture they're providing about their social situation, their social reality, their permitting reality? And how experienced is a team in a particular jurisdiction? So we'll quickly walk through those various different elements. So we'll start off with engagement. Most companies, but not all, still not all, talk about the wonderful relationships they have with local stakeholders and the wonderful things they do with their CSR programs. But how real is that information and how deep are those relationships? Does the company is its CSR policy just giving stuff away, which doesn't really create sustainable relationships? Or is there a much deeper relationship there where they're really getting involved in the development aspects with the community? Is there a CBA, a community benefits agreement, which are common here in Canada with First Nations? Strangely, whilst community benefit agreements exist in Canada, the Canadian companies don't really export those to other jurisdictions where they're working. To me, that seems very strange, because if it can work well in Canada, putting a good structure onto the relationship and what the shared benefits are, why wouldn't they take that elsewhere? Perhaps that's a rhetorical question, I don't know. But the key thing is, to what extent is a company positioning itself to be a development agent with a local community, bearing in mind that in many emerging jurisdictions, when you're out in the boondocks where the projects are, there's a lot of need, there's a lot of underdevelopment, there may be a lot of poverty, there's a lot of benefit that mining companies can bring, and the good ones do. So what I've put up here is just a few examples taken from some corporate presentations of what I would say is evidence that companies are doing the right thing. Please note that the examples I'm including in this presentation are not investment recommendations or endorsements for the projects. They're just merely examples that I've picked out of where I think companies do seem to be providing a good level of information on the particular points I'm making. So we've got Trilogy Metals, INV Metals, Continental Gold, Sol Gold, providing a lot of evidence and information about the type of engagement they're undertaking with the communities where they're active. Timelines. There are always permitting and engagement processes, so as an investor you want to know what they are. You want to know how long these things will take and what the milestones are. You want to know that management has a plan to execute on these things, and it will also give you an indication if things start to slip or slide, or if a project starts encountering difficulties. So here I've got some timelines again from Trilogy Metals, IMV Metals, Sol Gold, and Northern Dynasty. And in the middle, I've put an example of the Lassonde curve. Why? Because the time value of money is important to you guys, right? It's one thing to invest in a company you think is going places, but you want to get that return in when? 6 months, a year, 5 years? How long do you want to wait before you potentially get that return? And in emerging market jurisdictions, such as South America, where you have a culture where things don't necessarily run smoothly or to plan, and there can be significant drag or delay in getting the bits of paper you need, these things are very important. In Colombia, where I live, there's a TSX V-listed company. It's been trying to get it's got a very highly prospective copper project. It's been trying to get permits to drill that for probably about 9 years. It must have very, very understanding investors. I would imagine most people aren't prepared to wait 9 years so a company can drill test its target. I took the Lassonde curve from Brent Cook's Exploration Insight, so just to attribute that there. Transparency on processes and issues. I would say this is traditionally something that mining companies haven't done well. Some companies do it very well, but I would say the majority, there's room for improvement. And for me, this is a key factor, and one that very much reflects management's attitude and approach in dealing with challenges, problems, or incidents that will occur. There will always be incidents that occur, but I think how a company deals with them and addresses them tells a lot about what it's made of. Also tells a lot about how much it respects and engages with local governments and communities, and also treats you, the shareholders. There is also a material information aspect. Is a challenge, problem, or incident something or nothing? A material fact is defined under the applicable securities regulation to mean a fact that would reasonably be expected to have a significant effect on the market price or value of the securities. By this definition, something is material not if a company considers it is or not, but if you guys would consider it or not. So if some incident happens and you think, okay, I'm going to sell on that, or okay, it's not so bad, I'll hold. That's really the definition of material, and a lot of companies play sort of fast and loose with that. Mining in general still has a culture of trying to sweep things under the carpet and pretend that everything's okay when it isn't. Reacting to events rather than trying to get out ahead of the curve and really provide good information about what's happening, why, where is that going. And in this day and age with social media, challenges, problems, or incidents can appear in the public realm very, very quickly. Transparency will become increasingly important to earn and maintain investor trust and local stakeholder trust. Up here I've got a couple of examples from Northern Dynasty at the top, showing how they're progressing through their permitting process. Obviously that's the key thing for them. They've got a lot of work to do there. But they seem to be communicating how they're progressing on the different steps very well. And then the bottom two are examples of rapid disclosure of incidents experienced by First Quantum on the left and Continental Gold on the right. I think it's key that when things do happen, companies disclose as fully as they can and as quickly as they can. And here's perhaps an example. The top statement I took directly from a corporate presentation of a company. I'm not going to reveal who it is. The company said, Nicaragua is a good place to be. It's a mining-friendly jurisdiction. There are 6 Toronto-listed companies there, operating successfully there with 3 open-pit mines permitted in the country. But how complete is that picture? I don't think it's ever a good idea to take a company's word as gospel. For example, this here. What it doesn't say is it doesn't mention the social and this is a relatively recent presentation I took this from. It doesn't mention the social upheaval and protests against the government that have been ongoing for almost a year now, which led the UK Guardian to publish the story you see there about Nicaragua potentially moving towards civil war. I'm sure most people aren't very enthralled about the idea of investing in a civil war zone. It certainly also doesn't mention that because of the troubles with the government, it's difficult, if not impossible, to get loans in Nicaragua. Nicaraguan banks can't access international money at the moment. So how investable is that as a jurisdiction? Also, the protests have left the local economy in tatters. Tourism has been decimated. Agriculture is suffering. Which begs the question. Gold is now one of the most important, well, it is always one of the most important sectors in Nicaragua. Even more so now because tourism's fallen away, because agriculture's been hit by the protests. So at what point will the gold sector experience a social backlash? Because effectively, gold is indirectly or directly funding a government that is widely seen by many as being corrupt and oppressive, etc., etc. By continuing to operations, even if they're doing lots of other things well, the gold sector is actively supporting the government there. That may not turn out to be a very pretty picture. So let's bring this sort of round again, full circle to what I do. There are multiple sources out there that whereby you can access this kind of information. A lot of the newsletter writers here look at risk aspects. They undertake site visits and provide that soft information. Mining Journal, what I do, and other produce hopefully a lot of that information. What kind of things do I do? Site visit reports, sector context in the middle, regional focus, looking at a jurisdiction, looking at companies. What are the good things? What are the positive aspects? What are the negative aspects or challenging aspects? And we do that with the aim of providing hopefully a more complete picture, a contextualized picture about projects and investment. Okay, I've got a few minutes left, so I'm more than happy to take any questions if anybody has them. Thank you.